Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts.
Checking in on commodities, we're going to start on the weekly time frames and then zoom in. So the dollar, after a month of pullback, is seeing a bounce on the weekly chart. We're going to anticipate a weekly lower high compared to 97.71 is the most likely scenario to form, and we'll be watching for any weakness on the daily to indicate that our weekly lower high has been set. So our new key support, 95.03. Also looking down at 93.81 as a very key support level. We're watching at the potential of this head and shoulders pattern, where if we were to see this be a left shoulder, this was the head. And if now we form a right shoulder and then come down and break that 95.03 support, that will be a significant shift in momentum on the weekly time frame, in my opinion. So looking at the daily chart, what did this bounce look like? This bounce is still not changing the daily trend. This bounce is coming from the low of the dump, and anything under 96.96 is just a daily lower high. So that's the key resistance to be watching as we head into next week. The size of the bounce is significant enough that we will anticipate that once we do form a lower high, we will pull back and form a higher low as well. So an equilibrium is the most likely scenario on this daily chart. If we top out below 96.96, we'll look to pull back and form a higher low somewhere around the upper $95 range perhaps. And a tightening pattern on the daily is anticipated as we head into February. Gold on the weekly time frame starting to consolidate, closed at the low of the week. Anything on the weekly chart above 12.11 is a higher low. So the bulls have a lot of space to work with to form some healthy consolidation after a green month that we had and pretty much a very bullish November, December, January. And now we're topping out a little bit. We're still in the daily channel, but close to breaking support. That support is 12.76 that we have been holding within, and we were unable to break resistance. Very, very tight. Look how tight we just got day after day after day. 6 days of inside bars almost, and then a bear break on Friday, closing at the low of the day, and it's all about 12.76. If we break 12.76 this coming week, we can zoom out to the weekly and say, all right, weekly consolidation clearly underway. We need to establish a higher low. The bull miners have been a bit of a lead indicator. They have given us weakness first. As you can see, again, the first real weak day here on gold happened Friday. But on these miners, we look at the daily chart, and they started pulling back pretty much a week in advance. We lost the daily uptrend. So the weekly time frame is already well into consolidation and still looking for a higher low here as well. But the daily chart, again, very clear higher lows, and that higher low pattern was lost here back on Tuesday. Bears had an inside bar bear break, so they're certainly in control at this point. Zoom out to the weekly time frame, GDX for the bulls to keep their most strength. They want to hold 1990. If 1990 breaks, they must hold 1872. Checking in on the junior miners, pulling back very significantly on the weekly as well. And this is not a very confident building bounce. If we look at the monthly time frame here, we're looking at just a lower high forming on this monthly chart. So clear monthly lower highs for these miners, and that's not changing anytime soon. So keep an eye on that pattern, because that's a very long-term pattern that's been playing out at this point for about 2.5 years almost. Let's look at the senior miners on the monthly time frame. Probably similar, but a little bit different of a look. Again, just clear lower highs. That's a very important pattern long-term to be watching. And after a 4-month bounce, it's looking like we may just be forming a lower high. Have to change the monthly trend with a higher low compared to the low back in September, and then a bull break of continuation. That would be very notable for the miners. The first very notable monthly trend change in, again, 2.5 years. That's something to be watching longer term as well. Again, gold, we're watching the long-term monthly pattern here, where we're likely to form a lower high on the monthly and need to consolidate. So we have to be watching that as well. And if that is the case, same thing. We need this tightening monthly long-term equilibrium that's been playing out for multiple years. That has to break bullish in order to see those bull miners break their monthly patterns bullish as well. So I like the viewpoint on both gold and the miners long-term monthly charts, because they are going to give us some nice clear breaks of this equilibrium sometime in probably late 2019 at the earliest. And that's going to be a very important signal to be looking at if you do trade gold and miners. Oil. Oil confirmed the daily bull flag on Friday with solid continuation. Very healthy consolidation. This entire bounce, there's been no red flags whatsoever for the oil bulls. It's very easy to stay confident when your consolidation lasts 2 days where you don't even pull back. This was just inside bar bull break. We had 1 day of pullback on no notable bear volume and then just continuation. So the bulls have been in complete control. We're looking at the weekly key resistance approaching of 54.54. If we break that level, the odds of a weekly trend change will increase significantly. That alone doesn't change the trend, breaking that resistance. We will have to still form the higher low and higher high to confirm that trend change, but you're in a much more comfortable position as a bull if you break resistance before consolidation rather than consolidating before breaking that resistance. So it's all about 54.54 this coming week. The daily key support now to maintain higher lows is 50.36 and 50.96. So if those two levels hold, if 50.96 holds and the daily higher lows are maintained, the weekly chart's not going to consolidate. If we lose the daily uptrend, that's our first indication that the weekly top has been set and that we'll start consolidating. So those two support levels are important to watch, but obviously all the bull momentum was looking up as we head into this coming week. So 54.54 key support or key resistance test first thing this coming week to be watching, and that's going to have some implications on the weekly time frame as to what's most likely to happen the rest of Q1 2019. Now wrapping it up with natural gas, weekly time frame doesn't look like an impressive bounce at this point, but the bulls do still have a chance to see continuation. The daily higher low is looking to be established here at 321, and the bulls need to see follow through. They need to see continuation and see a break of 374. So that's currently our daily range to be watching, and if we do see that bull break, it will be a bit of an inverse head and shoulders pattern with our left shoulder, the head, this is the right shoulder. If we get that continuation, if we break 374, that weekly time frame is going to look more like an equilibrium and we'll make our way up towards $4. If we do not break that level, and if we see a bounce attempt and we top out at 360 and then fall back and break 321, that's going to be a very clear indication that that weekly bounce was weak and the bears still have control of the long-term trend. Looking at the 4-hour, we have to see a 4-hour trend change for the bulls to shift the momentum and to try and make their way back up to resistance. 374, 371.3, 353.3, and now anything under 353.3 is a lower high on the 4-hour, and the bulls have to change the trend. So we have to consolidate, hold the low of the pullback at this point of 321, and then see the continuation move to break the lower highs to indicate the daily higher low is clearly established and the bulls are trying to make their way back up for continuation. Natural gas has had some great volatility. UGAS and DGAS have been great for trading, specifically day trading with that volatility. Holding overnight, you definitely have a lot more risk. I traded UGAS on Friday looking for this oversold bounce. The 15-minute RSI being under 20 was an indication. So the outline of this trade that I did is I woke up in the morning, I looked at this chart and I said, all right, 8 red candlesticks in a row. And at that point, it was actually 7 in a row. We were on this candlestick. It was red. So 7 red candlesticks in a row on the 4-hour time frame. And we're due for a bounce to just form a lower high. So I'm going to scout out signals on the shorter term time frames that let me know a bounce is coming. I looked at the hourly time frame. I saw the hourly RSI was getting oversold. Again, we were down at the low of this move at this point. And then I looked at the 15-minute and saw that the 15-minute RSI was down under 20. So hourly RSI oversold, 15-minute RSI crushed. I entered a position on UGAS, got to a point where I could set my stop at break even, and then let it run for a bit, and definitely sold too early as I went out for the day and didn't feel like sitting at my computer all day. But setting it at break even and just letting it go would have obviously had very significant returns. But it's just an example of using the longer term time frames to establish what's the more likely scenario to happen, which in my opinion was a bounce to form a lower high, and then looking for those signals on the shorter term time frames to indicate that that is indeed playing out. So watching for the 4-hour trend change early next week to indicate the bulls still have a chance on the daily time frame. If we can't change the 4-hour trend, bulls don't have a chance. So that's step number 1 on Monday or Tuesday. Have to follow through with that 4-hour trend change. So hope you're well. Hope you have a good weekend. Keep an eye on those monthly charts for gold and the miners. Again, nothing's going to change with that anytime soon, but it's nice to have a general perspective on things. And I can pretty much say that gold is probably going to see volatility drop off for the next 6-8 months plus while we continue to remain in this tightening range. We're just looking for our lower high to be set compared to 1366. Then we'll look to pull back and form a higher low compared to 1160. And then we'll look for a break end of 2019 or start of 2020. And again, that's going to set the tone for potentially the next couple of years. So obviously it'll be very important. Thanks again. We'll see you soon.